In this example, we are going to look at the distribution of income or losses that include salaries and interest. We are going to assume that the partnership agreement of Bloom and Tucker in E4B states that Bloom and Tucker are to receive salaries of $20,000 and $24,000 respectively, meaning that Bloom will receive $20,000 salary and Tucker will receive a $24,000 salary. Bloom is to receive 6% interest on his capital balance at the beginning of the year, and the remainder of income and losses will be shared equally. So under example 1, we're going to assume that our income totaled $120,000 before deductions for salaries and interest. So the first thing we have to take into account is salaries. Whenever salaries are involved, those are the first to be paid out. So Bloom will receive $20,000 and Tucker will receive $24,000. So at this point, we have distributed $44,000 of the total income of $120,000. Next, we calculate and distribute interest. Bloom is also to receive 6% of his initial investment, which was $200,000 as covered in E4B. So in addition to his $20,000 salary, he will also receive $12,000 in interest as a result of 6% of $200,000. At this point now, we have distributed of the total $120,000 income, $56,000. So the remaining income is $64,000. $120,000 minus the $44,000 minus the $12,000 that have been distributed for salaries and interest. So the remaining then is split 50-50. So the remaining salary of $64,000, 32 of income, 32 will go to Bloom and 32 will go to Tucker. So once we have distributed based on salaries, interest, and then splitting the remaining equally, Bloom will receive $64,000 of the net income and Tucker will receive the $56,000, which is our total of $120,000. In the next scenario, our income totaled $48,000 before deductions for salaries and interest. So we follow the process as we did in example 1. We give Bloom the $20,000 salary and Tucker the $24,000 salary. We then give Bloom the $12,000 in interest. And so at this point, our remaining income is actually a negative. We have to go ahead and distribute the salaries and the interest. So now we have basically a loss of $8,000. So it is also shared equally, only now since it is a loss, it will be subtracted out. So Bloom then will get $20,000 plus the $12,000 minus the $4,000. So he will receive $28,000 of the net income, whereas Tucker will receive $20,000 as a result of his salary minus the shared $4,000 loss. In scenario 2, we actually don't even have a net income. We're starting out with a $2,000 loss. We still proceed as normal like we did in the other two scenarios. We go ahead and distribute our salaries of $20,000 and $24,000. Then we distribute the $12,000 based on the 6% interest to Bloom. So at this point, after we've distributed the $44,000 in salaries and the $12,000 in interest, since we already started with a $2,000 loss, we now have a loss of $58,000. So the remaining income or loss are shared equally. So the $58,000 loss will be split among the two partnerships. So that will be a loss of $29,000 to each of them. So then when we calculate their totals, Bloom will have $20,000 plus $12,000 minus $29,000. So he still will receive an income of $3,000, whereas Tucker will actually have a loss of $5,000 based on the salaries and then him not receiving interest. In scenario 4, we have a larger loss of $40,000, and we will proceed as we did with the other three examples. Even though you're starting with a loss, you will still distribute the salaries, and then you will still distribute the interest. And so at that point, we now have a total of a $96,000 loss because we distributed $44,000 in salary and we distributed $12,000 in interest. So for the next step, we take the $96,000 and spread it evenly among the two partners. So when that's all said and done, Bloom will have to account for $16,000 of the loss, which will be taken out of his capital account, and Tucker will have to receive the $24,000 loss, which will be taken out of his capital account.